The World Bank proposal to adjust Kenya's tax bracket has attracted mixed reactions from tax experts who say that merely increasing tax rates for top earners will not result in more tax collection. Jimmy Mbogo sat down with Onesmus Kema, a senior manager for tax and regulatory at KPMG East Africa, to break down the expected impact of the proposals should the National Treasury opt to onboard the recommendations.
In their proposals to amend the tax band in the country, the World Bank argues that the tax burden affects low-wage earners unfairly compared to high earners, whom the institution insists do not see a significant increase when accounting for contributions. In the World Bank's proposal, individuals earning between 0 to 288,000 shillings who are currently paying a personal income tax at a rate of 10% should maintain the rate, while those making between 288,000 and 388,000 who are currently paying a personal income tax at a rate of 25% should see a reduction in the rate to 15%. The World Bank is also proposing a further breakage of the band between 388,000 to 6 million into two, with those earning between 388,000 to 2 million shillings paying a PIT at a rate of 25% from the current 30%. While those earning between 2 million shillings to 6 million shillings should increase their rate to 32% from the current 30% rate. A situation that should be replicated to those earning between 6 million shillings to 9.6 million shillings, whom the bank is proposing an increased rate from the current 32.5% to 35%. With those earning above 9.6 million shillings expected to move from the current 35% rate to 38%. But though tax experts welcome the proposal to reduce the rate for low-income earners, they argue that the move to increase the rate for high earners will not result in increased taxes owing to the small size of those within that band.
It's more of them being able to create a buffer for themselves and ensure that Kenya is able to service its debt. It's more of a borrowed concept, and as like I said, 38 is actually, compared to the rate that we see elsewhere, is very modest.
Okay.
The only question is it time for us to make it 38, or do we first of all need to reduce?
Kema, however, welcomed the proposal to reduce the tax rate for lower earners, noting that it will spur economic activities by allowing them to spend and in turn releasing money back into circulation.
If you give me exemptions from payroll taxes, what do you do to my disposable income? It increases. And again, let's not forget that this income that we have, in the end, is what we get to circulate in the economy. And so if you help me save up by ensuring that my disposable income has increased, then eventually I end up having more to spend.
Besides the tax band changes, the World Bank has also recommended that the government expand the scope of the e-Citizen platform to handle higher volumes of transaction and ensure seamless integration with the Treasury IT ecosystem, as well as process all tax exemption through the automated tax exemption system to increase efficiency. Noting that the automation of tax exemption will generate efficiency by reducing the time and effort required by both taxpayers and tax officials. Jimmy Mbogo, Citizen TV, Nairobi.